What exactly is a hedge fund? Basic question, but really not so much so because how many people know what a hedge fund is? I mean, people may have heard of it. People may pretend that they've heard of it. People may say they know what it is. They may go to cocktail parties and brag like they know what it is. But the truth is, this is an esoteric business. It's a secret business, and not a lot of people know about it. And part of my mission in life is to share some of this confidential information with people who want to be in this business. And that's what these videos are really all about. So the word hedge means to mitigate or offset, try to reduce risk in some way. And that's what the word hedge is all about. So a hedge fund really has two different meanings. One is hedge is a strategy. It's a way of offsetting competing types of risks. So people in the stock market and people who are in economy, in economic environments know that there are non-correlated risks, or there are opposite correlated risks. And what that means is that when something zigs, the other thing zags. And that's really the objective, is to put things together in a way that if something goes up, something else will go down, so that the net effect is kind of a little bit better than medium. And that's what hedge funds do, is they mitigate risk by offsetting different kinds of risks. Now, the other thing that a fund is just a private equity structure. And that's what we talk about. All these videos that we're making all the time, that many of you have watched, are really just about setting up funds and setting up private equity structures so that money can come in, so that you can do with it for what you need. So the truth is that the strategy of creating offsetting risks is not really so much the critical part. The critical part is that you set up a private equity structure that you can raise capital into, and then you can apply the risk or the charter to your fund that you want to. Now, why does real estate call it a hedge fund? Well, hedge funds are really something that the stock market uses. They can be in bonds, they can be in stocks. But I think about hedge in real estate by offsetting long-term gains and supplementing it with short-term cash flow. Because the problem with real estate is that very frequently, while you're waiting for appreciation, there's no cash flow. Real estate has some fixed costs that are expensive. So by offsetting long-term and short-term, or combining them together, they're not so much offset like in risk, but they're a combination of the two things. You end up with a very, very good return. You explode your return by supplementing your long-term with the short-term, and that helps you get into the long-term even better. And then as a promoter for yourself, you participating in cash flow, long-term growth, that smart money we always talk about, and then the fees along the way, the getting paid for your time, all those things contribute to the success of the venture. So that's really what a fund is. That's what a hedge fund is. That's the strategy behind these things. A little bit of basic information, but thanks for the question. And listen, this is a great business, so go out and stake your claim.